Good morning, America. Good afternoon from Germany on this Friday, last day of this trading week, with major news. Producer price index was today. Unfortunately, I wasn't able to live stream right away before the news came out because I had some issues with my trading platform logging in, but it was on my side because they introduced a new security feature like every time, and I just overread the emails and missed to log in. So there was some issues from my side. I was looking for my bingo card to find the login data, and therefore I wasn't able to log in and to live stream, because without any live market data I wouldn't have made any sense. But now I managed to log in a read-only mode, but now I have live data and we can talk about PPI, about the outcome, and about the next important levels of the Nasdaq and everything else. So let's right away hop into the market. We see that the Nasdaq dropped a little bit, so about 200 points to the downside from 11,730 to 11,500, and what was the low? 516 was the low, but we went back right away 100 points to the upside and trying to work on a reversal here. This is a 5-minute chart of Nasdaq future. Let's see if we can come back to the moving averages here. So data was a little bit bearish. Let's just look at the numbers here. So the number came higher as expected. We were talking about this yesterday. I already expected it to come higher because the forecast was pretty low, but the actual number was even higher than expected, 0.4%. So yeah, this caused the drop of 200 points in Nasdaq. And you see PPI also was a little bit higher, 0.3 instead of 0.2%. Yeah, this caused a little bit of fear, higher inflation, possibly higher interest rate hikes. But if we take a look at FedWatch tool, we see next Wednesday, so in 5 days, is the Federal Reserve meeting, and we see that 79% of market participants expect a 50 basis points rate hike, and only 20% expect a 75 basis points rate hike. And we see the change to yesterday. It changed to more probability of 50 basis points. So here is no fear. So there's no shift to the 75 basis points because of higher PPI data. So this probably won't affect next Wednesday meeting of Federal Reserve. Therefore, market can react with a 100% reversal. Everything is still open. We have major news next week, a lot more. Let's see for next week the important data. We have core CPI, consumer price index, on next Tuesday, so right before the meeting. Also major important inflation data. Then we will have here FOMC economic projections. This is the Federal Reserve interest rate decision. This will be the most important day of the week on Wednesday. And on the Thursday we will have core retail sales, initial jobless claims, Philadelphia Fed manufacturing index, retail sales. You see a lot of data also on Thursday. So next week is full of economic news, and it will be important to watch out next week on Tuesday, Wednesday, Thursday. So 3 days in a row with important data, and there's a lot more of possible movement. And on plus, we will have on Friday a big expiry, triple witching day. This is important. Friday 16th is triple witching day because there will be the expiries of futures, options, and so on. So this will be an important day as well for the markets. Yeah, let's go back to the chart. So where are the important levels? Let's just look on a higher time frame here. Just see your chat here so I can answer your questions. The high point of the day, let's just draw a line here. The high point of the day, we are still pre-market here, but the high point was 11,745, so about 11,050. And the low point of the day, just draw another line here, was here right after the data came out at 11,516. And let's go on a higher time frame, 1 hour chart here. we see we are still bullish here. We are making higher lows and higher highs, so that's why we can move back right away. That's why I don't trade the data as itself. I just trade the chart, so I trade direction and not the news. I expected the news to come out worse than the forecast, but I wouldn't trade it because everything can happen on the outcome of the news. As you can see, news are bad for the market, but now we already see a turnaround. And yeah, when the market is open, we can see a 100% turnaround already. So half an hour until the market opens, and we can go back to 11,700 or higher. So as if nothing would have happened. I've seen these, and it can happen again because I see a bullish pattern here. And you see it was a major resistance where we were rejected. So it was just a normal thing that we couldn't manage to push above because the data was bad for the market. It was pushed back right here at the previous support level, which now acted as a resistance level. It's not a wonder that this happened. Which is the next important resistance level. Probably you'll see here the high points of this day. This was last Thursday. What was it? Last Tuesday, December 6th. Here were the high points at 11,844. But more important will be the high point here, 12,100 or 12,144. This is the more important high point. You see between here the 12,000 level and the 12,144. This is a major resistance zone. So I think that we will be able to manage to get here at the beginning of next week, depending on the outcome of the economic news. But this will be the major resistance zone here. And as soon as we manage to go above, because I think the third attempt, this was the first attempt, second attempt, and on the third attempt we probably will be able to go above. Yeah, we will be struggling in this area here possibly, but after 1 or 2 days we will manage to go above and see the breakthrough on this third attempt, and then we will see more buying pressure. This is what I expect the market to do, but we will have still some room to go, but there are no major resistances anymore. You see here was a previous resistance here, but this is only a smaller one, so no major resistance levels anymore on this chart. So therefore we can go right away to the high point and above if we manage the breakthrough, but at first we have to close above the moving averages here, 9 EMA, 20 EMA level. We still have to manage this, and then there is a lot of room to the upside. Shaik didn't expect what we saw today. Why not? Because the data was better than expected and you didn't expect this? Yeah, could happen. That's why I always say prepare for everything. Yes, the market reacted 200 points, nothing special, because the data was clearly better than expected and therefore there was the drop. And now we see the reversal. We are right at the 9 EMA line, and this is a resistance level here, so smaller rejection here, but then we can try to go above. Let's see if it works. If we go below the last lows here, it's more bearish, so let's draw another line here. This one would be bearish if we break below this level here, and if we manage to get above VWAP, it's looking more bullish again. But for this we will probably need the market to open in half an hour to get in with more volume, and more volume can push the prices higher. I did mention yesterday that the expectation was, it didn't say too high, but it said it was high in just what I see, because comparing it with the data of the last months, just bring this up again. So if you go a little bit deeper into and look at the forecast from the previous months, you see 0.2 is a low level. We also had a forecast of minus 0.1 and it just came in line, but 0.2 is one of the lowest of the last months. You see there was also 0.8, 0.4. So 0.2 was several times, but it was low. And therefore it was just possible that we had a higher outcome than the forecast. Last month it was clearly a high number, and it was more possible. There were more possibilities that we see a lower outcome than the forecast. This time it was just more difficult to be lower with the outcome than the forecast. It's easier that there was an underestimation and we had higher numbers. So and that's what happened. So yeah, but I don't guess the outcome of the numbers. I just trade the direction of the market. That's the important thing you have to take on. Yes, that's for PPI. So everyone now looking on the next week already with a major news, CPI and Federal Reserve meeting and so on. Yeah, you see rejection again at the 9 EMA line. Yeah, just let the market settle here. Maybe it can find a bottom and then turn on to higher levels. Yeah, it was a closing level of previous days. You see here the opening of yesterday, and the day before yesterday was the closing here right at the 11,500 level. Therefore this was a major support where we managed to go to higher levels. Let's see if this Friday can end green like yesterday. Would be nice to see more green days in a row, because we already had the 5 consecutive red days here last week and this week. And yeah, we just have to go back to these high points, and then maybe on Federal Reserve meeting day we can manage to go above this level when Jerome Powell is speaking and telling us why they will only move by 50 basis points and not by 75, and then everyone can party again like the last time when Jerome Powell spoke. Yes, let's go back to your chart. Are you on the daily? This is a daily chart here. Yeah, this is a daily chart. And the other one was a 5-minute chart. So this is a 5-minute chart here, and the other one was a day chart. Rishi is thinking we go down on a market open. Yeah, could happen, because sometimes we see the same reaction like here on the outcome of the news. Some stop losses are triggered when the market opens because they are not able to trade before market opens. So it can happen, of course, but the major thing we will see is volume income. So maybe we'll see just a drop for the first minute, and then buyers will step in. So almost the same reaction like we have seen on the outcome of the news. This can happen, but I'm not trading it because I'm not scalping. I'm still in my swing trade long, and I'm still green on my position because I entered it at 11,500 points or around this level. Therefore, I'm still not stopped out and still in my long swing trade position. Yeah, as I told you yesterday, I'm just quiet and waiting and being patient and not acting in FOMO. You can take on more on a long trade if you haven't your full position size now. If you still think that it's bullish, then enter your long position. So we have not signs that it's moving higher right now, but if you want to enter, it's not a bad price level for entering. Just a chance, and you see that we went back right away. This is a good sign for the bulls because it's not showing weakness here. Party again, yeah. We want to see party mode. I don't have a flashlight here for party mode, but you can do your own party mode if you have a position, and then you can party it. But every weekend is party, yeah. I also like my weekend days where the markets are closed. I don't party only the weekdays when market is open. I also party on weekend. So let's go on with Tesla. Tesla is still weak on a month. Let's go to the day chart and to see yesterday Nasdaq was green with more than 1%, but Tesla was still red. They managed to come back a little bit, so we see a small doji here with a wick to the downside. Yeah, could potentially mean that we see a smaller reversal here, because when the market is green, Tesla also should be green. But we see today again it struggles, the same with the market, and yeah, it's still in a downtrend. Lower highs, lower lows. I'm just waiting for the break of the last lows here, and then you can take on more shorts, but I'm waiting maybe for higher levels around the 190, 195 level to short it again. Not shorting the stock, but selling a short call in options, so time is in my favor. Even if nothing happens and it's just trading sideways, I can earn some money. Yeah, trade the weak stocks to the downside and trade the strong stocks to the upside. Just trade the trend and not your own opinion. And even if you are a big Musk fan, I'm not at all. You should know this, but I would never trade my opinion on Tesla because it's a crazy stock. You have seen what happened the last month, And yeah, this stock can rally 1500%, but it can also go down by 50%. And yeah, the same with Carvana. Yesterday I've showed you the chart of Carvana. So the same here, 1500% to the upside, but 98% to the downside. So everything can happen on the stock market, and you have to be prepared for this. It's just a thing of mind. So you have to be prepared emotionally for everything what can happen on the stock market. So we can see crazy rallies bringing up stocks that are almost worthless, like Carvana, which has such a high amount of debt, and then bring it down 98% again. So yeah, this is one of the charts I like most, because it shows that everything is possible at the stock market. And also it's the best season for showing such a chart, because it's a Christmas tree chart. You see, it's going high and it's going down again. It's like a Christmas tree, and it's Christmas season, so it fits really good in the current time. Yeah, let's go to crude oil. Crude oil is still in the area. I drew some lines yesterday here. This is a support level. It was major resistance back in October 2021. So we are still in this level, in this area here on a week chart. So crude oil is still weak, as you can see, but we still managed to hold this level. So let's see if we can see a reversal. I'm not trading it. I still have my short put here. But yeah, maybe we can see some strength for the next week or beginning of next week, when the market can catch up. Then possibly the crude oil can also catch up some dollars to the upside, and just for the first attempt here hold this level. But it's in a downtrend. It's weak, and you have to take into account that you are trading against the trend if you take on a long position right here. Going to natural gas. Natural gas is, wow, it's above 620 now. Nice. You see, I still have a long position here. There's 2 contracts on this account, and I have 3 on the other account. And I set a take profit at $6.249. So we are almost at my take profit level. It's right at the 9 EMA now. Hopefully we can manage to go higher by 2 cents, and then I'm out of my position and I will bank in a big profit here. Yeah, we reached it, nice. You see here, I sold all the contracts right away at $6.249, and I'm out of my position. Nice. Thank you, market. Thank you, Mr. Market. Thank you for this nice movement here. 5% in natural gas today. The first time I was too early. I entered at $5.60 here, but it went down to $5.33. And I re-entered on this day here, and I rode to the long side, this reversal here. And yeah, now it's time, not for shorting, but maybe for taking on a short trade in the options, because volatility is still good. Do I have an open volatility chart here? Yes, I have. You see, volatility is catching up right now, because just close this, is catching up right now because we are moving to the upside really fast now, like the last time when we went up to 175% volatility expectation. And yeah, you will get good premiums if you sell some calls to the upside. I can sell a 12 strike call in January or February and still earn a good amount of money. And yeah, the gap is now closed. You see, this was the gap from Friday to Monday. This was what I was speculating for, closing the gap. But maybe we will not be able to go above the 20 EMA line, or maybe even close below the 9 EMA here on this day. Yeah, it's still rising. But yeah, I just wanted to trade for 2 or 3 days because the January contract is expiring this month, and therefore I wanted to be out of this contract and not to trade it for too long. Didn't want to take on a swing trade here, just as I told you, for 2 or 3 days. Yeah, I managed to go out after 2 days. Nice trade. And yeah, I just waiting for the price to set a high point. Then I will possibly enter a short call trade here and take on some option premium. I'm still in my short put trade, so this should also catch up some money. Let's see, have I opened the charts here? Yeah, I have it open, so I can see. Just bring it to the other window here, not showing you my whole portfolio. Natural gas is now in the green, 52%, but I can show you the the position here closed. So you see my other account, these are 3 contracts here, and I banked in $18,600 in these 2 trading days here. And yeah, some more profits on the other account with the 2 contracts. So in total 5 contracts closed now. And yeah, maybe taking on a short call at the end of the day, or maybe beginning of next week when we see a high point. I want to see something like this. So setting a high point or setting something like this here with a Fibonacci, not Fibonacci, sorry, with a, today, candlestick charts, missing the word right now, but it's coming up to my mind again in a few minutes. Can't come up to it. So I want to see something like this here at the previous high point. So maybe we will see this at the 20 EMA line or just right below the 9 EMA, and then I can take on my short call. I don't have to catch the right direction. I just want to trade volatility and the theta decay, and that's why I'm trading options and not the future. Future was just for this gap close to take the direction and to trade the direction here. Yeah, what else do we have? Nothing major important here. I wanted to bring up something new for you. Orange juice is interesting because orange juice is already pulling back 1.5% today. This is a week chart, but I will have to bring this up on a monthly chart for you. So let's move to Finwiz. Finwiz here. Doji is the word I was missing. This is a doji candle. Sorry, doji candle. I want to see something like this. So pulling back with a huge wick on the upside or a doji candle. This is a good sign for a reversal. Like here, you have seen it here, doji candle. You have seen it here. So I want to see something like this. And here you see this is also a doji on the downside. So moving up, and the hammer on the next day. So good sign for the upside. I want to see something like this in this area, and then I can take on a short call or a short on orange juice. And orange juice is also interesting because we are at the major resistance level. If I go on a monthly chart, so here I show you on Finwiz, you see previous high point here back in 2012 2016 was previous high, and we reached this high point now, and you see how strong it pulled back the last times. So yeah, possibly we can also manage to go back strong now in the next weeks. The only problem I see here is that the expiry for the orange juice contract is in January 10th. So you cannot take on a swing trade when the contract is expiring on January 10th. So you have to trade the next expiry. There's not a lot of liquidity right now. Orange juice is not one of the liquid futures on top. So it's more difficult to trade this one here, but it's just a good risk-reward ratio. You can also trade it just for 2 weeks. It's getting more illiquid, but you can trade it to the short side because it's in a strong backwardation, what means that the January expiry is at a high price level and the next expiry is at a lower price level. I will show you this on a chart here. Let's see this here. Bring this up. Where is it? Where is it? Cannot find it today. Don't know why. Yeah, we'll see it later. and I can show you the different contract prices. I can also bring it up here. Orange juice, then we will see it again. Orange juice here. So here, let's see. So the next expiry is in March, and you see the current price level is at $2.21, but the next expiry for March is at $2.07. So we are lower for about 14 cents, and this is called backwardation. So the next expiries are at lower price levels. So if you want to short and you take on the next expiry March, or if you want to roll over from January to March, then you will get a lower price level and you have less potential for shorting. This is a problem if you want to short in a backwardation. The market is already expecting that the prices will come down in the future, and that's a problem. But the more liquid contract right now is still January expiry, but the contracts will move to this. I can also show you will move to a March expiry. Just look at the website of ICE, and there you can see the where is it? Your futures here, not the options. Not possible. Why is it not possible? What's happening today? Yeah. Come on. Orange juice futures. Nothing going on here today. It was always possible to see the amount of contracts which were traded today. Don't know why it isn't working today. Okay, doesn't matter. But here we can see all the expiries of orange juice. So we see January, March, May, July, September, and so on. So this is the next expiry. This is the next one after January has expired. So all the contract volume in January will move on to March within the next weeks, and then this one will be the front contract month and the most common one traded. And therefore, if you want to take on a swing trade, you should already trade March contract. If you just want to be short for 1 or 2 weeks, you can also trade January contract. But I think it's an important level here, and I want to take on a short trade in orange juice if I clearly see that it is a high point here. Yeah, that's it for orange juice. Now let's see if you have some questions for the rest. I need to get some disco lights. Yeah, thank you, Althea Doji. I've seen that you wrote it. Are you close your position of Nasdaq? No, I don't close my position Nasdaq. It's a swing trade. I'm still long. It was rejected here now by the 9 EMA, but it holds the lows, making higher lows. It's a good sign. Just waiting for market open in 10 minutes, and then we can manage to break through maybe. As I told you, I will close out the December future at the previous high points here on a day chart between 12,000 and 12,144. So possibly at 12,100 level, I will close out December future, because December future is expiring next Friday, and therefore I have to be out of this contract, else I will have to roll over on March. I have also some longs in March contract, and these contracts I will hold for higher levels. 12,500 and 13,000 will be my closing levels. So I will close out half the position here and let the rest run up to 13,000. And I will not close before we reach these levels, or 15th January is coming. So I have 4 weeks to get to these levels, and it's 10% to the upside if we manage to go to the highest point. This can happen with a Christmas rally or New Year's rally, but then I think the risk is too high to hold on a long trade here, because the weakness of economy will be more important, and some speculators will possibly trade short here, because there will be less good data, so worse data from economy, and we will see lower BIP data and so on, and therefore I think that the markets can pull back again at the mid or end of January. Therefore I don't want to stick on a long trade here anymore, and I want to be out the latest of mids of January. But these are my levels where I want to swing trade. It's still a good risk to reward ratio. I'm still in my long trade, didn't move my stop loss. It's still below the last low here, below 11,400. Explain how market reacts after a hammer candle. Yeah, a hammer is, you know what happens if you hammer something. It's going down or it's going up. So if you see a bullish hammer like this on natural gas, it was here. If you see a bullish hammer like this, so we retested the lows, but we managed to go up to the end of the day, and it was a green body. So there was a strong buying pressure, and therefore this indicates strong buyers here, and this indicates more buying pressure the next days. This is what happened here. So this is called a hammer candle, because you have here the body of the candle on the upside green, and you have this huge wick on the downside looking like a hammer. And yeah, that's a strong candle indicating more buying pressure. You can also see this to the downside like a gravestone, not a hammer but gravestone. So you will have the wick on the upside, and you will have a red body on the downside, and it's called a gravestone, and it's just the opposite of a hammer. Then it's a lot of selling pressure, and there can be more selling pressure to the downside. So something like this but with a red body would be a gravestone, and then we can go to the downside. Okay, questions. I was thinking about shorting BYND, but the interest rate is 187%. Is that charged if you hold your short overnight? Yeah, but it's charged per year. So the interest rate is always per year. So let's see sorry, I borrow desk. This is a free tool to use for my broker, so I can see the interest rates for every stock I want to short. And I see here the interest rate is right at 147% right now, but it was at 169 yesterday. And yeah, the problem here is that only a few stocks are available for shorting. You see, there remain 300 stocks for shorting. This can cause a short squeeze, because some shorties will be forced to buy in their position, because some others who lend the stocks out want the stocks back, maybe to sell them, and then the borrowers have to get back the shares, so the brokers are forcing them to buy in, and this causes a lot of buying pressure. And this is why the interest rate is so high. Like here, we have seen this in BYND, I think back in 2018, when I shorted the stock the last time. I've seen 300% on BYND for shorting interest. It was really crazy. Then the stock went up. We can look at this again. It went up crazy. Let's just bring this up, BYND. It went up to 200. You see here, 245 was the high point. Yeah, it was in 2018, like I had in mind. The stock went public for $45 and then went up to 245 with a giant short squeeze. But then, after all these short squeezes happened, we went down again to $75. We went back up again to 227 and down again to 15. Just crazy what happened here. And yeah, let's see what's happening now. But a new short squeeze can happen now with these high interest rates, so be cautious if you want to short it. So yeah, we will just make one or two more sentences because my family is coming back home, and then I will close out this live stream here. Just answer two more questions from your live stream. Don't stocks generally fall in January due to the January effect? No, not at all. In the first week of January, we often see more bullish power because there is still a shift from window dressing. So a lot of stocks that went fine in December are moving higher in the first week of January. Then sometimes we see it struggling, but January is normally a good month and not a bad month. It's beginning to be weaker in February, March, but the worst months are beginning in April, May, and up to August, but then it's going better in September, October. Again, that's why there is the saying, leave the market in May, but remember to come back in September. So because the worst months of a trading year are beginning in May, June, July, and so on, but the best months are at the end of the year and the beginning of the year, and therefore January is not a bad month at all. But it's just because of the economic data that I'm saying I don't want to be in a long trade anymore. Kindly explain difference between doji and hammer and shooting star. I would always confuse these. Yeah, you can read on Google just to read on the candlestick pattern. The difference is just the main difference. I can explain here on a natural gas chart. The main difference is on a doji, you will have a wick on the up and on the downside and almost nobody. So there is no body of this candle. It's just the opening price is like the closing price. This here is a red one, but it can also be green one. So almost no difference between opening and closing price, but huge wick on the up and downside. This is called a doji. But you can also have only a wick on one side, like here on the upper side. Then it's called a gravestone doji, or just a gravestone candle. And the other thing is a wick on the downside, then it's called a hammer. So this is a bullish candle, this is a bearish candle. Better would be to have it with red body, but yeah, it is like it is. But you see two patterns in a row, so just a doji and here a gravestone, and therefore it's just bearish sign. And yeah, that's what you can take into account with your trading. I wouldn't rely only on the candlestick patterns, but I take them into account if I'm on higher time frames like day chart and week chart. So my son is already calling, and I will close out this live stream. Hope you will have a nice trading Friday. We will see us next week, and I wish you a happy weekend.